Welcome back to Investing Talk Podcast.
It's great to be back. And frankly, we have a massive show today because we're finally tackling the company that has been, well, just dominating the financial headlines and the charts for the last few weeks.
That is right. But as usual, before we start, subscribe, like, and comment to this video to support the show. It really helps the algorithm find us and lets us keep bringing you this kind of analysis. Now, today we are talking about Rocket Lab.
Rocket Lab.
And I have to be honest, for the longest time, I feel like this company was just filed away in people's brains as that other launch company.
Right.
You know, the little brother to SpaceX, the Pepsi to Elon's Coke, but without the market share.
That was the narrative for years.
Oh.
SpaceX is the giant, Rocket Lab is the scrappy underdog picking up the scraps.
Yeah.
But looking at the data we have today, specifically leading up to today, Friday, January 23rd, 2026, that narrative it's dead. It is buried.
It certainly feels like it.
Yeah.
I mean, I'm looking at the screen here, and the stock is trading in the $86 to $96 range. It's hitting all-time highs.
It has essentially tripled in a year.
Exactly. When you see a move like that, it stops being a little brother story and starts being a market leader story.
And that's the question we need to answer today. Is this price action just hype? Is it retail traders getting excited about, space lasers? Or has Rocket Lab fundamentally transformed from a launch company into a defense prime?
Because that's the real shift, isn't it?
It is. After that recent $816 million contract, the market is starting to price them like a major defense contractor, like a Lockheed or a Northrop, not just a speculative tech stock.
Okay, let's unpack this, because when I see a stock go parabolic like this, I mean, literally vertical lines on the chart, my skepticism radar starts pinging.
Of course.
I want to look at the hard numbers first. Let's pivot to the fundamentals. We have the Q3 2025 numbers. What's the real story here beyond the hype?
The headline number is obviously the revenue. They brought in $155 million in Q3. That's up 48% year over year, which beat the consensus estimate of 151.7 million. So a solid beat, but beats can be deceptive if the quality isn't there.
It was a beat, but you have to look at where that money's coming from. This is the crucial insight that I think a lot of casual observers miss.
Go on.
If you ask the average person what Rocket Lab does, they'll say, they launch rockets. And they do, but that is not the growth engine anymore.
Right. I'm looking at the segment breakdown here. Space Systems revenue was $114.2 million.
114.2, growing 36% year over year.
Exactly. Space Systems now makes up, what is that, about 74% of their total revenue?
74%. This is the aha moment. They aren't just a trekking company to space. They are building the things that go to space. Satellites, solar panels, reaction wheels, the high-margin components.
And that mix shift explains the margins, doesn't it? Because usually, launching rockets is a low-margin, capital-intensive nightmare.
Oh, it's brutal.
You got fuel, launch pads, weather delays.
Yeah.
It just burns cash. Precisely. Launch is like owning a gas station unless you are at massive scale. But component manufacturing, that is where the money is.
Yeah.
Their GAAP gross margins hit 37%, top of their guidance.
And non-GAAP was almost 42%.
42%. That is not a launch company margin profile. That is a high-tech manufacturing profile. It's much closer to an Apple than an airline.
Okay, so they're making money on the parts, but we can't ignore the operations. They are still launching rockets, right? I mean, the name is Rocket Lab.
Oh, yeah. More than ever, they hit a record 21 Electron launches in fiscal 2025.
And a 100% success rate, which is key.
Crucial. In an industry where things literally blow up, that reliability is a massive moat. It tells customers, your payload will get there.
It is impressive. But I want to talk about this end-to-end model they keep pitching. Is that just corporate buzzword bingo? Vertical integration sounds good, but is it real?
No, it is very real. Think about it this way. They build the rocket, the Electron. They build the satellite bus, the chassis of the satellite, which is the Photon. And they make the components inside, like the solar from their Solero acquisition.
So it's a one-stop shop.
It is. A customer doesn't have to hire 3 different companies and hope they talk to each other. Rocket Lab does the whole thing. It's the one throat to choke model.
Which brings us to the elephant in the room. The big contract that proves this model works.
The big win. the $816 million contract with the U.S. Space Development Agency, the SDA.
For 18 missile tracking satellites.
Right, and this is why I mentioned the defense prime shift. This isn't a commercial contract to track whale migrations. This is a critical national security asset.
816 million. Just for context, that essentially doubled their backlog overnight.
It did. When you win a contract like that, you are not just a startup anymore. You are part of the military-industrial complex. You're essential.
Which usually comes with guaranteed government checks, which investors love. But let's look at the financial health, because I'm looking at the cash flow statement, and it is not all sunshine.
It is not. They are still burning cash.
Right. Q3 free cash flow was negative $69 million, roughly. Adjusted EBITDA loss was about $26 million. They are spending a lot of money.
They are. But you have to look at the balance sheet. They have over $1 billion in cash and equivalents.
They did raise about $469 million recently.
Right. So the runway is there. They are not going bankrupt next week.
True. $1 billion in the bank helps. But why is the burn still so high if revenues are up 48%? You'd want to see leverage kicking in.
It's all about Neutron,
Yeah.
their new medium-lift reusable rocket. Management has been very clear that R&D spending on Neutron is near its peak.
So this is temporary.
That's the thesis. They're building the factory, the pads, the tanks. Once Neutron starts flying, that spend drops off and it transitions to production inventory. It's a hump to get over.
Okay, a classic spend money to make money situation. That covers the fundamentals. Let's pivot to the charts because the price action has been absolutely wild.
Wild is an understatement. It's been parabolic.
I'm looking at the data. The stock is up somewhere between 170 to 188% in the last year.
And 70% in just the last month.
70% in a month. That's crypto-level volatility in a defense stock.
That is what we call a blue sky breakout. When a stock hits all-time highs, which it did, hitting 91.80, even touching near 96, there is no overhead resistance.
Explain overhead resistance for anyone who isn't a technical trader.
Sure. So usually when a stock goes up, it hits a price where people bought it years ago and are just waiting to sell to break even. That's resistance.
The bag holders.
The bag holders.
Yeah.
But at an all-time high.
Yeah.
Everyone who owns the stock is in profit. Nobody needs to sell. It creates this feedback loop where the price just keeps drifting higher.
But gravity has to kick in eventually, right? The RSI, the Relative Strength Index, is over 70. That usually signals overbought.
It does, but here's the trick. In a strong trend, a stock can stay overbought for a long, long time. It doesn't mean sell immediately. It means be careful.
It's also trading, 57% above its 100-day moving average? That is a massive gap. It feels like a rubber band stretched too far.
A pullback would be healthy here, actually. Analysts are looking at that $70 to $72 region. That was the previous breakout zone. Ideally, that old ceiling becomes the new floor.
And who is buying this? Is it just retail traders chasing the green line?
It's a mix, but the retail interest is huge. Rocket Lab has actually become the top holding in the GS memes basket at Goldman Sachs.
The GS memes basket, is that a real thing?
It is a real institutional product.
Yeah.
It is a basket of stocks that Goldman tracks with high retail sentiment and momentum. Being at the top means the hype train is fully loaded.
Which means lots of liquidity, but also lots of volatility.
Exactly. It can swing 10% in a day on no news.
Okay, so you have the Reddit crowd and the institutional funds all piling in at once. Let's shift gears to sentiment. Not just the traders, but the vibes of the market.
The vibes are overwhelmingly bullish. It's rare to see this much consensus on a stock that's already run up this much.
The analysts seem to be scrambling to keep up. Usually they lead. Here they seem to be chasing.
They are absolutely playing catch-up. Morgan Stanley just upgraded them to overweight with a price target of $105.
Up from 67.
Right. When a bank like Morgan Stanley puts a triple-digit target on it, it validates the move for the big money, for the pension funds.
And Baird raised their target to 100, naming it a top pick. Even Cantor Fitzgerald, who has a lower target of 72, reiterated overweight.
And their logic is key. They view Rocket Lab as the only SpaceX alternative.
That's the core narrative again.
It is. But there was another big sentiment driver, the Hegseth bump.
Right, the visit by the war secretary.
Exactly. He visited their facilities as part of the Arsenal of Freedom tour. Politics aside, from an investment standpoint, having the war secretary tour your factory, you cannot buy that kind of publicity.
It signals the government wants them to succeed. They need the supply chain diversity.
It cements that status. Critical defense contractor.
However, as the skeptic here, I have to point out something that usually kills the vibe for me. Insider selling.
Knew you were going to bring this up. It's the elephant in the room.
I have to. It is massive. CEO Peter Beck sold about $90 million in stock. COO Frank Klein, about $7.3 million. We're talking over $150 million in total insider selling in the last 90 days. That's a lot of stock from the people who know the company best.
It's a big number. It looks scary on the surface, I grant you that.
If the future is so bright, why is the CEO cashing out $90 million bucks? If I thought my company was going to 200, I wouldn't sell at 90.
Okay, context.
Yeah.
The stock has rallied 200%. Most of these sales were Rule 10b5-1 plans.
Break that down. What's a 10b5-1 plan?
It's a pre-planned selling schedule. Executives set these up months in advance. I will sell X shares on this date to avoid accusations of insider trading.
So it's automated?
It is. And frankly, Peter Beck founded this company. His net worth is almost all tied up in it. Selling some for diversification after a historic run-up isn't a lack of faith. It's just prudent financial planning.
Fair enough. Diversification makes sense. But it does create headline risk. When investors see CEO dump stock, they get jittery.
It does, but so far, the market has completely absorbed that selling without flinching. The price kept going up. That shows you how strong the demand is.
True. But trees don't grow to the sky. We have to look at the other side. Let's pivot to the bear case. What could go wrong? Because at $90 a share, this is priced for perfection.
It is absolutely priced for perfection. The valuation is risk number one.
We are talking about multiples that would make a value investor faint. They are trading at something like 48 to 50 times forward revenue.
Not earnings, revenue.
Exactly. The market cap is what, $40 to $44 billion? But their trailing 12-month revenue is only around $555 million.
It's a massive disconnect.
You're paying $50 for every $1 of sales. It implies the market has already priced in the next 5 years of perfect execution.
If they stumble, even a little bit, the multiple compression could be brutal. The stock gets cut in half overnight.
And speaking of stumbling, the entire future of the company rests on one thing: the Neutron rocket.
Their medium-lift reusable rocket, the Falcon 9 competitor. The whole thesis depends on Neutron working.
And we had a hiccup recently. Just 2 days ago, January 21st, there was a report of a stage 1 tank rupture during testing.
Yep. The stock slid about 4% after hours when that news broke.
A tank rupture isn't a small thing. That sounds like a structural failure.
It does, but you have to understand the engineering philosophy. In rocket development, you test a failure. Rupture sounds scary, but if it happened during a pressure test where they were trying to find the breaking point, it's just part of the process.
You want it to break on the ground so it doesn't break in the air.
Exactly, but it still feels risky. If this pushes the timeline back, that's the danger. They're targeting a launch in the first half of this year. If Neutron gets delayed to 2027, that thesis takes a massive hit.
And that leads to the third risk: competition. We keep saying they're the alternative to SpaceX, but SpaceX is the 800-pound gorilla.
They launch every few days.
They have the capacity, the reliability, and the pricing power. They can lower prices to squeeze Rocket Lab if they want to. It is not a fair fight yet.
It's not. But here is the counter-argument. The government doesn't want a monopoly. The Pentagon hates relying on one provider. They're willing to pay a premium to ensure SpaceX isn't the only game in town.
So that's Rocket Lab safety net. They're being subsidized, in a way, by the need for strategic diversity.
In a big way.
Okay, so we have a parabolic stock, huge government backing, expanding margins, but also sky-high valuation and technical risks. It's a complex picture. It's time for the verdict. How do you score this?
Looking at the transition they've made, from niche launcher to a vertically integrated space prime, I have to give this a bullish score of 8.5 out of 10.
8.5. That is high, given the valuation concerns we just discussed.
It is high, but here's the core thesis. They have a $1.1 billion backlog anchored by that SPA contract. That gives them revenue visibility they have never had before.
They know where the money's coming from.
They know. The margins are expanding toward 40%. And frankly, they are the only credible hedge against the SpaceX monopoly in the West. That strategic value being Plan B for the entire Western world is worth a massive premium.
So what's the timeline for an investor? Is this a buy today or a wait and see?
If you're an investor, this is a multi-year hold. 3 to 5 years, you're waiting for Neutron to commercialize, and that defense revenue to really hit the books, you have
Mm-hmm.
to ignore the weekly swings.
And for the traders?
For traders, the near-term catalysts are Q4 earnings in late February and that first Neutron launch attempt in Q1 2026. Just be aware, if that launch gets delayed or goes wrong, the volatility will be significant.
It feels like we're watching a company grow up in real time, moving from adolescence to adulthood. Those growth spurts can be painful, but the potential is undeniable.
It really is. It's rare to see a hardware company move this fast. It's a fascinating time to be watching the space sector.
Well, that's the breakdown on Rocket Lab. If you're riding the rocket or staying on the launch pad, let us know in the comments. Don't forget to subscribe.
See you next time.